Emily Cheng in San Francisco, and this is Bloomberg Technology. Coming up in the next hour, Amazon bombshell. The company says founder and CEO Jeff Bezos will step down in the third quarter to become executive chair. Andy Jassy, who's been running Amazon Web Services, will become the next CEO. We've got all the details and analysis from all angles as Amazon reports operating income and sales that beat estimates. Plus, Alphabet's record profit. I speak to CFO Ruth Porat on its explosive ad growth, bringing profitability to the cloud, and how they'll deal with mounting antitrust issues. Her comments coming up. And cheers, Uber agrees to buy alcohol delivery service Drizly in a $1.1 billion deal, but DoorDash and Bevmo owner GoPuff also made a play. We're going to speak to Drizly CEO Corey Reyes about what clinched the deal. All those stories in a moment, but first, U.S. stocks rallying as the day trading frenzy collapses. We also get, of course, big news from Amazon and Alphabet in their results. I want to get straight to the big market picture with Bloomberg's Kriti Gupta. And Kriti, got to know what the move in Amazon shares was after that huge and unexpected announcement from the company about Jeff Bezos.
Well, Emily, you saw a little bit of uncertainty in Amazon shares right after that, but it looks like investors are liking the news, a little bit more comfortable. Let's just take a look at the price action in post-market trading. Amazon up by over 1%. You also see Alphabet, which is Google's parent company, also up by 1%. Looks like those are the pre-market shares, but the post-market, you are really seeing a rally. Once again, in Alphabet shares up over 6% once again after the closing bell. Amazon shares up just shy of 1%. And like you said, Emily, strong beats on both those fronts. Amazon really stealing the spotlight there, though, with that new kind of changing of the guard. I do want to look at what happened intraday, though, for the stock market in the United States. NASDAQ 100, the big tech index that has to deal a lot with the tech sector, that actually rallying for a second day in a row, really coming on the back of last week's losses. Extremely significant to keep in mind that risk sentiment has started to see a little bit of an increase, a little bit of a positive turn as we see some of that retail bid dissipate just a little bit. Speaking of which, I do want to take a look at GameStop and Silver. Those were the targets of that retail trading frenzy. And as you can see on the screen, intraday, you really saw both of those stocks take a little bit of a step back. And this is extremely important because I highlight, Emily, I highlight this because this has a lot to do with risk sentiment and confidently investing in the market without that fear of being caught in a short squeeze. And I do also want to switch over, bring up to our last stock right now, and that's Alibaba shares, really taking a hit today, even though they also beat on their fourth quarter earnings, strong earnings across the board, but investors were really looking for any news on that antitrust probe, and they just didn't get any, and that meant some selling in those shares, Emily.
Still can't believe GameStop, watching it every day. Kriti closing at $90 a share. Thanks so much for that update. I want to get back now to Amazon and the huge announcement. CEO Jeff Bezos announcing he will be stepping down from his role in the third quarter and that Andy Jassy will become the e-commerce giant's next CEO. This coming on a day that Amazon reported income and net sales beating estimates. We've got PacView co-founder and president Melissa Burdick, who joins me on the phone. Melissa, a longtime former Amazon employee. You worked there for many years. As somebody who's been covering the company for a very long time, this certainly came as a surprise. We knew it would happen eventually, but now, curious for your take.
Yeah, I think that, there was a signal when Jeff Wilke announced he was retiring that he wouldn't be the pick. That was about a year ago. So kind of knew this was coming, that there'd be a successor. And Andy Jassy is just, he's been with Amazon since 1997, the inception of AWS. He led that, arguably Amazon's most profitable and successful business unit. So I think it leaves Jeff Bezos able to concentrate on building rockets and the things that he wants to do with someone at the helm that he can really trust and, can really tackle the big problems and opportunities that Amazon has ahead of for them, like healthcare, like, logistics delivery. They've just got a lot of great inventions and innovations to do. So I think Andy Jassy will be a great leader to do that.
That said, Jeff Bezos has been so involved at Amazon proper for so long, and it still seems he's very much in the weeds with his question mark emails. So I wonder if it's at all surprising to you that he is leaving now. We know he has other projects, but he's had those other projects for quite some time.
Yeah, I think that, he wrote in some of his letters that he sent out to folks that, he feels like it's a time that he wants to focus on these other areas. He's not retiring, quote unquote, but really, and I wouldn't be surprised if he isn't still involved. He just might not, he might not get a Jeff email. Now you'll be getting an Andy Jassy email. So yeah.
Well, tell us a little bit then about how Andy Jassy leads. I sat down with him a couple of years ago for a long form interview. We know he's got that relentless focus on customers, that same relentless focus that Jeff has. What kind of a boss is he, and what kind of a boss do you think he will be while running the entire company?
Well, look, I mean, all of those leaders and the executive team and in general, there's just so much discipline at Amazon on execution. They really have a great process around creating leadership principles, executing on them, creating goals from the top that roll down. And so, that's no different with Andy Jassy. I think that, he has proven himself in building an amazing business with AWS. And I think that he'll be able to deliver that same discipline across Amazon. So, yeah.
Sometimes at a loss for words. It is such a big deal. We do have this quote from Jeff Bezos to staff that you referenced, saying, "I intend to focus my energies and attention on new products and early initiatives. Andy is well known inside the company and has been at Amazon almost as long as I have. He will be an outstanding leader, and he has my full confidence." We've been talking about a lot about the regulatory issues that Amazon, we expect, will face over the next couple of years. We saw Jeff Bezos dragged before Congress last year. We've seen lawsuits filed against Facebook, against Google, and Amazon could be next. And I wonder how you expect Andy Jassy to navigate those issues, given it could be his number one issue for the next couple of years.
Yeah, and I think that that's where Amazon is going to be focusing maybe on less of the hot topic areas, the areas that they get in trouble with around private label and things like that. And so I think that we'll see maybe some less focus in those areas where they've had some pressure against them. And I do think that Google and Facebook are ahead of Amazon in some of these antitrust issues that they're facing. So, my guess is that Amazon will focus a little bit less in those hot pressure areas and more on some more wider plane areas that they'll maybe get less in trouble with.
What does this mean for AWS now that Andy won't be the, sole leader of that business?
I feel sorry for the person that's going to fill that role. He's going to know a whole lot about what to ask, what questions to ask. But, I think that given, Amazon has a great way to promote within their organization and company. I'm sure that they've identified a leader that will take over that business, and Andy will know very well the questions to ask. And like I said, they're just very disciplined in their quarterly business review, monthly business review, and their financials. They have a really great execution method around understanding the business unit. And so they're a very well-run company and execute very well. So I think that they're not going to have any issues with a leadership change like this.
Oh, okay. Meantime, I do want to touch on the numbers, which is what you initially agreed to join us to talk about. Amazon projecting revenue that signals continuing strong e-commerce demand. Of course, the big question is, when we come out of the pandemic, when we settle into whatever new normal is, does Amazon growth take a hit? What is your outlook?
No doubt. I mean, this year has been huge. They've had so much growth acceleration due to e-commerce. And, perhaps that slows a little bit next year. It's hard to comp a year like this year. But you can't argue with, just the acceleration of e-commerce in general, the Prime subscribers that they have. When we look at the earnings report, their other category was up 64% this quarter. That's the advertising revenue, and they had not just a big quarter just in general, but advertising was huge too. So, they have a lot of opportunity heading into 2021 with these numbers.
All right. Melissa Burdick of PackView, who worked at Amazon for 10 years before that, thank you so much for breaking it down and bringing us some personal commentary from your experience there. On this big news that Jeff Bezos will be stepping down later this year, he'll be succeeded by Andy Jassy, who runs Amazon Web Services. Andy Jassy becoming Amazon's next CEO. All right. Meantime, Alphabet reporting record profits this year. I spoke to CFO Ruth Porat about ad growth, the cloud, how the company is dealing with its own antitrust scrutiny. Details on that, my conversation with her, next. Meantime, Alphabet reporting quarterly sales that beat Wall Street estimates, buoyed by heavy digital advertising spend over the holiday shopping quarter, shares jumping in extended trading. We're joined now by Dan Newman, principal analyst at Futurum Research. Dan, I was on the phone with Alphabet CFO Ruth Porat when the news about Jeff Bezos stepping down broke. So we were all sort of digesting that as we were talking. We talked first about ad growth and whether or not she sees it keeping up post-pandemic. And she said, we feel good about ad strength and the pickup in activity. We feel good about the acceleration of the digital transformation, and many activities that you see moving online will continue to be quite durable, she said, whether that's content, e-commerce, retail. What's your headline takeaway on these results?
Yeah, the results were outstanding with, I think, over half the earnings for the year coming in this most recent quarter. But as I said to you off the air, the cloud was the story of this quarter. My phone was ringing off the hook, people looking for comments about what's going on with the cloud business and the plan to break those numbers out. And we saw its growth coming in at 46% for this quarter, a big growth, over $13 billion for the year. So that was probably the biggest headline for me. I had a good feeling that what Ruth said was going to come true, that the lull in the advertising business was coming back as we're starting to see mobility pick up. We're starting to see more normal behavior, despite the fact that the pandemic is still looming. But I think everyone's eyes were really on this cloud breakout to say, how close is Google really in terms of Azure and AWS? And now we know. It's, not even close to the $12 billion, but it is really vying for that third position alongside the likes of Oracle and IBM.
Absolutely. As you point out, cloud revenue up 47%. And, the big question is, when are they going to start focusing on profitability in the cloud versus growth? And I got the sense from her, it's really still all about growth. She said, an important element of our operating laws is that we've been building out our organization ahead of revenue, product portfolio, ramping data centers, ramping sales, all of which enables us to address a very sizable total addressable market. It's interesting that we are talking about this on a day that Andy Jassy has been named the next CEO of Amazon, given that he started that AWS business and Google and Microsoft have been chasing it ever since. What's your take on Jassy taking over at Amazon and how that changes the competitive landscape in cloud?
Yeah, so as you said, the forward look about growth and profitability, Google has the luxury. You saw their bottom line results. If the company wants to keep pouring gasoline on the fire of growth and investment, the company can do so. This move to bring Andy Jassy, to me, has so much positivity in it. If you look at the performance of Amazon over the past several quarters, AWS is kind of an unsung hero. Everyone thinks about the company for its e-commerce, trucks, drones, disruptive Whole Foods. But realistically, AWS has been delivering significantly to the bottom line of that company, propping up those earnings per share. As we saw, almost a 2x for this quarter. So while the growth for AWS has come down to, about 28% this quarter, we're still looking at over $12 billion on the quarter basis. And Andy Jassy has continuously been behind this philosophy, Emily, of saying we're going to meet the customers where they are. That's been growth of data centers, new products, expanding the portfolio, expanding into software and larger platform investments beyond its infrastructure. So there's a lot to be encouraged by. Of course, I think Bezos is going to have a significant influence on this company for a long time. I think Jesse has really earned this opportunity, and I'm really excited to see this transition, to see can Amazon be a CEO-led company beyond its founder, which is something a lot of companies have to face at some point, and some do really well and others do not.
Right. Well, Andy Jassy does have $12.7 billion to show for AWS this quarter, so he is off to a good start. Dan Newman, Futurum Research Principal Analyst, thanks so much for that perspective. Coming up, FireEye also reporting results, record revenue, and more talk about what they are learning from that massive SolarWinds hack. My exclusive conversation with FireEye CEO Kevin Mandia coming up next. This is Bloomberg. FireEye also out with strong fourth quarter results 2 months after finding out they were one of the hundreds of U.S. companies breached in the SolarWinds cyber attack campaign. I sat down with FireEye CEO Kevin Mandia earlier to get an update on both.
2020, we had a record year in revenue, a record year in billings, even though we didn't guide to billings, a record year in ARR, record year in operating income, and it's just record after record. So very pleased with the performance of the team in 2020.
So what's your outlook in coming quarters as a vaccine rolls out and people presumably start going back to the office?
Well, I think a lot of it depends on the pandemic, but at the same time frame, a lot of things emerged. I almost felt like a shift change in cybersecurity after the SolarWinds implant. People are recognizing you can have an implant in a network. 18,000 companies could be impacted by that implant, and nothing detected it. It took FireEye doing an investigation to find, hey, there's an implant in a third-party supply chain. And so people want to know, how effective is our security? We're buying all this stuff, and wait a minute, 9 months? It took 9 months till somebody discovered this implant? That seems like an awful long time. So I think you have a more discerning buyer in security. And security, again, when you have a breach and a campaign like this cyber espionage campaign, Emily, everybody's turning their focus inside of businesses to what's our cybersecurity program and how good is it? And so I think security effectiveness will be a big theme in 2021.
Now, we're 2 months now since FireEye disclosed the initial attack, and everybody still wants to know what damage was done. Can you elaborate?
Well, in regards to the red team tools that were taken from FireEye, there's no question this attack group broke right in, went right for our red team tools. And those are the tools we use to do assessments of people's security programs. How good are they? And we launch and simulate attacks based on the things that we respond to. But I think what the impact of this breach was, or this campaign, because it was more than just a breach, really depended on the victim and what they did, whether you're a government agency or a software company, and they may have attacked several other industries. But what it really does is shows what are, it kind of shows a hole or a gap in what are the rules of engagement, what's acceptable cyber espionage. And you can feel the escalating hum in cyberspace, Emily, because no one's defined the rules. So we don't have rules. So I think what you're going to see is groups go out, they conduct their espionage operations, and they kind of move the needle. And we've got to figure out as a nation, what's our doctrine and what are we going to do about it?
So is there evidence that the data or that these tools have been used, and have you built new ones?
Yeah, so there's no evidence from our partners, both in the security private sector as well as in the government. We've seen no evidence of the FireEye red team tools being used by another third party. So we haven't seen that at all, and that's good news. And by the way, we created over 500 rules and shared them with the entire world to detect our own red team tools. So I feel we did a good job there. We'll have to recreate some of those tools in the future, but one of the nice things about FireEye, when you respond to over 1,000 breaches every year, we're seeing the red teams from other nations, and what we really do is just repurpose that R&D that they're showing us. They're still breaking into companies and organizations around the globe, and we're responding to intrusions from China, from Russia, from North Korea, from a lot of different nations. So we just repurpose those. We kind of look at them and say, hey, if they only did it this way or that way, they may have evaded additional detection. So we're already on our way to creating a new set of red team tools.
Now, we've seen other cybersecurity companies come forward since saying they were also a target of a Russian adversary. Talk to us about the conversation that's happening within the cyber community right now about this and future cyber attacks. Like, if you're being targeted, how do you assure clients that they're safe?
Well, you know what? Cybersecurity right now, if you look at cyberspace, it's a dangerous neighborhood, period. And you've got to make sure you have the appropriate locks and safeguards when you operate in it. Nobody likes to see a company breached, period. And we're on the front lines interacting with those executives all the time. And you get a real sympathy to what it's like. And then we became victims ourselves in the fourth quarter to the cyber espionage campaign. When I talk to other security vendors, we know we're in this together, that ultimately there's an obligation. We're stewards for our shareholders as CEOs, but we also recognize we have to protect cyberspace. We have to protect critical infrastructure. So I think we've seen an elevation of communication amongst the CEOs in security. What are you seeing and what are you doing about it? So information sharing is at an all-time high. We're trying to formalize it. We're trying to make it faster. We're trying to be better at it. So we're all kind of banding together to make sure we can do a shields up for all the nations that we protect.
How confident are you in the new administration and their response to the attack, and how has that response essentially changed with a new administration?
Well, I think it's an issue that's not divisive. Whether you're Republican or Democrat, you care about cybersecurity and you want to make sure you do your best to protect American organizations from attacks, regardless of the domain those attacks occur in. I've seen some good appointments. We know a lot of the folks in the administration, and I'm very confident that we're going to take steps to try to establish bright lines in cyberspace, that we're going to try to impose risks or repercussions to those who attack American organizations. So I'm confident we're going to do things differently. Even if we do something as simple as communicate doctrine, here's the rules of the road, and this is what we believe in as a nation, you'll see other nations adapt those and think about what they do on offense before they attack the United States.
FireEye CEO Kevin Mandia there. Much more to that conversation, which you can find at Bloomberg.com. Coming up, more of Amazon, Jeff Bezos stepping down. Welcome back to Bloomberg Technology. I'm Emily Chang in San Francisco. Back to the top story of the day. Amazon CEO Jeff Bezos will step down from his post in the third quarter of this year. He will be succeeded by Andy Jassy, the head of Amazon Web Services. I want to bring back in Bloomberg Tech's Brad Stone, our senior executive editor, who's written a book on Amazon and is about to publish his second book on Amazon. Brad, curious if you saw this one coming or if this surprised you just like it surprised the rest of us.
Well, Emily, I'd be lying if I said I wasn't surprised. Certainly that it happened now. But when I thought about it and reflected on the story that I'm telling in the upcoming book, which is coming in May, it did make a certain amount of sense for a couple of reasons. One, the story of the last 10 years at Amazon is Jeff guiding all the new stuff like Alexa and the cashierless Go store, the healthcare initiative and the satellite internet initiative, and then letting the deputies kind of run with the more mature businesses like Andy Jassy and AWS. I suspect that he finds the new stuff fun. And while the details of the older businesses are getting so intricate that it's impossible for one person to keep track of everything. And the second thing is that the future of Amazon, in large part, is government scrutiny in Washington and in Brussels. And what we saw last summer when Bezos was subpoenaed to talk to the House Antitrust Subcommittee, he kind of went kicking and screaming. I don't think he enjoys the hot seat. Of course, nobody does. But I would assume that he feels his time is better spent on other things. And he has all these responsibilities, like administering his philanthropy, the Bezos Earth Fund, and then running Blue Origin, the space company, which we have to admit has lagged seriously behind Elon Musk SpaceX. So I think it's only a partial stepping away. He's still executive chairman. He'll get the focus on the things that he likes doing, which is the invention, while also reserving time to go run this increasingly complicated personal life and extracurricular activities that he has.
Jeff Bezos reached for a snack during that congressional hearing, Brad, and I believe the video of that went viral. So talk about scrutiny. We did see a congratulatory tweet from Sundar Pichai, the CEO of Alphabet. Of course, this has overshadowed both Amazon and Alphabet results, which are out today. Sundar tweeting, "Congrats, Jeff Bezos. Best wishes for day one, Earth Fund. And congrats, Andy Jassy, on your new role." Just a peek at Andy Jassy's Twitter page. He doesn't mention AWS much at all, but he talks about being a dad, a big sports, music, and movie fan, and experienced buffalo wings eater as well. Look, you've talked to Andy Jassy a lot over the years. How do you expect him to lead, and how do you expect him to handle this antitrust scrutiny that will almost certainly define the next couple of years, at least, at Amazon?
Yeah, it's interesting. You mentioned his Twitter bio. I mean, Andy is someone who kind of wears his passions on his sleeve, has that kind of Amazon-style humility, maybe even more so than Bezos has had these past few years. He's someone who you'll never catch in a private jet or in the owner's box at the Super Bowl. He's still, not to insult his fashion stylings, but, it sometimes looks like he's wearing the sport coat he got at Filene's basement. But at the same time, he's enormously and somewhat frustratingly, I have to say, for journalists, kind of disciplined when it comes to his public speaking, whether that's at the AWS events or in interviews. And, I just expect him to be a very careful, public spokesperson for Amazon. I imagine he'll challenge regulators who are trying to catch Amazon. But he's also, it's a kind of a homecoming for him because he started in the retail business. His first few jobs were like in Amazon's advertising division and in the CD business or a DVD business very early on in Amazon's history. And it was only after he spent time as Jeff Bezos' first shadow or technical assistant that he went off to run the AWS business and really pioneer that. But he's been a very vocal member of the S team. He's had a hand in a lot of the big decisions that Amazon has had to make over the past 20 years. And so in some ways, particularly with Jeff Wilke retiring, it feels like a very natural transition.
Jeff Wilke, who used to run Amazon's consumer unit and, of course, left last year. Now I wonder if we should look back at that one as a sign. Bloomberg Tech Senior Executive Editor Brad Stone, thanks so much for joining us. And, of course, we will all be waiting for your next book on Amazon out later this year. Joining us now to recap the top stories of the day, Amazon and Alphabet. We've got Lee Drogan now, founder and CEO of Estimize. So Lee, I'm sure you heard the conversation there with Brad. We're all still sort of digesting this news that Jeff Bezos is going to be stepping down from his baby. What's your take on how the company changes and what chapter 2, I guess you could say, is?
I think this makes total sense. I think it's underappreciated just how amazing and innovative and important to everything that goes on basically in technology today that AWS is and was. We totally take it for granted. All of the services that we use, all of the rapid development, all of the it's everything. And beyond that, I think this makes total sense going forward from an innovative perspective because he has touched everything, all of these other businesses. He basically is the person that drove the platform that underpins the modern internet. So I think they will get rewarded for that in the short term. In the long term, the stock is up. It makes total sense. AWS itself, 28% year over year growth. 40-something% of the net income. I mean, the business is still firing on all cylinders, even though there are competitors out there. Google and Microsoft do have cloud businesses that are growing faster and certainly knocking at the door here. But this isn't slowing down, anytime soon. And as we've seen with the last, 6 to 9 months, this infrastructure is not just critical to these businesses, it's been critical to the country and to the world.
I don't think we can expect that Jeff Bezos will not be involved. He will surely continue to be heavily involved in the company. That said, we are entering a new phase of regulatory scrutiny for Amazon that Andy Jassy is going to have to deal with. How big a risk factor do you think that is, and how do you expect him to lead through that?
Yeah, look, I've been on one side of this for a long time. I just don't think for Amazon this is an issue. It is going to be for some other companies, but if you look at the actual, the actual concepts that are being put forward in terms of regulation, they just don't add up to something that either makes a lot of sense or will be super significant going forward. Amazon is basically a monopoly, but we have decided in this country that some monopolies are okay, and they are, and they're good for consumers. They're certainly good for consumers. So we've basically handed them that in return for something, which is being neutral. And there are places that they've stepped over the line in terms of not being neutral, but that is a tiny piece of, I think, what the kind of populist rhetoric around Amazon attempts to stick them with that just won't, it won't stick. There might be little pieces around the edges, but by and large, this won't be an issue.
I have to ask you, Lee, meantime, what's going on with these Reddit retail traders? GameStop dropping back down to $90 a share, but the market's really rattled, and the game, it seems, has been changed. Like, the rules have been changed. The field now looks completely different. At the same time, you've got some of these Redditors like Roaring Kitty, as he calls himself, continuing to try to rally the troops. And I wonder, are we seeing this fizzle out, or does this continue? Is this just a new part of the story, and does this have to be incorporated into the strategy of traders, both professional and retail?
Yeah, good question. There are a lot of takes, obviously, and a lot of different vectors on which you can approach this whole story. But for me, the most important one here goes back to I've been in the kind of social finance space now for over 12 years. First at StockTwits and then founding Estimize about 10 years ago. And I don't think we ever quite foresaw the combination of the ease of getting retail investors invested in basically playing a casino game, which is what Robinhood and some of these other brokerages have done. They've made it that easy that it is a dopamine receptor casino game at this point, mixed with the social aspect of being able to basically drive a herd in one direction. And I do think that is a tail risk that hedge funds are going to have to deal with in the future. We just saw it on the short side. We have seen it on the long side with Tesla for sure. And that's not going away. The populist aspect to this, I think, is completely bunk. And, basically you can write off that entire political populist, story. But going forward, yeah, this is going to happen over and over again. We just saw the largest degrossing of hedge fund AUM since 2009. This was bigger than the degrossing that happened in March. So there are long tail risks here that haven't quite been accounted for. And certainly while I think you can write off the whole, populist aspect to the WSB thing, you definitely can't write off the concept that online crowds plus, dopamine casino games being, these investing apps is going to be really important.
Lee, love your analysis there. Thank you so much for breaking it down on a big day. Estimize founder and CEO Lee Drogan with us. Appreciate it. Okay, coming up, pop open the bubbly for many reasons today. Alcohol delivery company Drizly toasting today with a $1.1 billion deal selling to Uber. We're going to catch up with the co-founder and CEO next. This is Bloomberg. SpaceX's second test flight of a new deep space vehicle ended in another explosive fireball after one of the prototype's engines appeared not to reignite as planned. The Starship SN9 lifted off with no crew from SpaceX's Seaside launch pad in Boca Chica, Texas. In December, the Starship SN8 also slammed into the ground when SpaceX went ahead with a test launch, even though federal regulators had denied the company a required safety waiver. We'll continue to follow how this one evolves. Meantime, Uber has agreed to buy the alcohol delivery startup Drizly for $1.1 billion, beating out at least two rivals that held talks with the company. The Boston-based startup has had a breakout year with sales nearly 400%, surging above levels as consumers ordered in alcohol instead of going to the store or going to the bar. I want to bring in Drizly co-founder and CEO Corey Reyes. Corey, thank you so much for joining us. So, have to admit that I'm a customer. Got to start with the obvious. Why Uber and why sell?
Well, both good questions, especially coming after a year where I think it was a breakout year. It was a defining year for Drizly. Two real reasons, though. I think the first one is when you hear Dara talk about the vision for Uber, about a world where not only can you get food delivered very quickly, but now alcohol, and then you throw in pharmacy and multiple other categories in the future. I want to live in that world. I believe in that world. And I think very much Drizly could accelerate the path to providing that consumer experience that we all want and deserve. On the other side of why now, the market is so nascent for alcohol delivery, for e-commerce overall. We've spent the last 8 years building the infrastructure to bring this particular category online. And we have a big vision. We want to be a household name. We want to be synonymous with alcohol. And while we believe we could get there by ourselves over the coming 5 or 10 years, this is really an acceleration. And this gives us the ability to move quickly with the platform and the technology and the scale and the expertise that Uber brings in a way that very few others can.
Well, and Drizly is such an interesting company story, founded in Boston before DoorDash and Uber Eats even existed. So in a way, you paved the way for some of these new consumer behaviors. That said, is this kind of growth going to keep up post-pandemic in a new normal? Are we still going to order this much alcohol when we can go buy it at the store or go to a bar?
Well, I think you need to separate the categories. And I believe alcohol is going to have very different dynamics than food or convenience or grocery. I believe it's going to be one of the few categories that has an organic positive growth rate, even after an incredibly tough or rather large COVID comp. And all that comes back to consumer awareness. So much happened in 2020 to drive a new awareness for the legality of alcohol coming online. Who is Drizly and why is it potentially a better experience than you could get maybe even walking into your local liquor store? That hasn't changed. And so when we think about bringing 2% of alcohol online prior to COVID, more like 4% today, we still have so much green space ahead of us where I believe this should be a 10, 15, and soon to be 20% online industry in the coming 5 years. That leaves a lot of room for consumer behavior to change.
So we've reported that DoorDash and GoPuff, which owns BevMo, also tried to buy Drizly. What were those offers like? How did you make this decision? Did they fall short of that $1.1 billion price tag?
Oh, it was much less. The conversations were organic. We actually zeroed in when we discussed anything about moving forward with the company. Uber was our choice and is more cultural than anything. I think the price tag of today might get the headline, but our focus internally at Drizly has been finding the right team with the shared vision that we want to be able to work with and accelerate what we're doing, and at the same time combine in such a way where we can drive value for Uber on the other side. So I think that's really been our focus, and I think we found the right fit with the right company and the right leadership team.
Now, the cannabis part of the business, Lantern, isn't included in the Uber deal. Why not? And what happens to that business now?
Well, Lantern's going to spin out to be a standalone company as part of closing. And that was part of the initial idea behind Lantern. And in many ways, it was Drizly 2.0 and taking a technology, finding out how to intersect that with regulation for a very nuanced category, one that's changing incredibly dynamically over the next couple of years. So Lantern was built for this moment. It was always a separate company. And now it has the chance to go on its own with its own management team that is incredibly well prepared, its own balance sheet. And I'm excited to see the next few years. I honestly believe Lantern is going to be the Drizly for cannabis and potentially has incredible things ahead of it as that, that market and that regulation starts to open up.
Now, quickly, we did see layoffs after Uber bought Postmates. What are you telling the team? Will there be layoffs? Will you be staying at the company?
I will absolutely be staying at the company. There's so much more to be done. We built for 8 years. I think that only affords us the opportunity for this next phase to provide the consumer experience that we know should exist and that consumers deserve. And I think this is a very different deal. And this is part of the reason why we singled in on Uber very quickly. The way they approached the conversations, the sincerity, the respect they showed us, despite being 100 times the size in terms of enterprise value, we believe they want to build Drizly and at the same time take a lot of our expertise and bring that into the Uber Eats app. I don't think of them as mutually exclusive. I think of them as complementary, and we're excited to do both. So for all those reasons, I think the team should be thrilled. And I think we found the right fit for Drizly to be built over the coming years.
All right, Corey Relas, Drizly co-founder and CEO. Thanks so much, Corey, for taking the time to join us today. All right. Coming up, I'll be speaking with the CFO of Visa, Vasant Prabhu, about the company's latest earnings. It's been a big earnings week, and economic predictions for the rest of the year. That is next. This is Bloomberg. More U.S. companies are topping earnings estimates this quarter reporting season, with tech and financials among the biggest winners. Visa announcing earnings last week, also surpassing estimates, however, much still dependent on what the future holds for the U.S. economy. We're joined now by the CFO of Visa, Vasant Prabhu. Vasant, great to have you back here on the show. So, what are you seeing in consumer behavior right now, and what clues does that give us about how they will be spending in 2021?
Well, thank you, Emily, for having me. Yes, we just reported earnings, and the consumer is holding up reasonably well around the world. In fact, in the fourth calendar quarter, it was our first fiscal quarter, we saw a sequential small improvement in spending domestically almost everywhere. In fact, in the US, we had some healthy growth of about 8%. What we're seeing is a significant shift in how people are spending money. As you might expect, there's a big shift to e-commerce, a big shift to using debit. There's significant growth in retail goods and services. The holiday season was quite strong compared to prior holiday seasons, but somewhat different, less spending on travel and also on entertainment. The stimulus payments are definitely going into the economy fairly quickly. They went out right after the new year. We saw a big jump in our debit card spending right after that. In fact, through the first 3 weeks of January, debit card spending has been 10 points stronger than it was in the fourth quarter. And around the world, it varies by country. Some are close to back to normal. Some are going into some lockdowns. But all in all, the consumer is holding up fairly well almost everywhere.
So this shift in debit, do you think that's a permanent shift towards debit cards? And what does that mean for Visa's business?
Well, a significant component of that we think is permanent. Debit has become sort of the gateway in some ways for people to move away from cash. There's a lot of categories that people are now using e-commerce for, like food and drug. That's everyday spending, and they're using debit cards online. We see that a lot of the stimulus payments go into bank accounts or on prepaid cards, and that comes out as debit spending. Our Visa Direct business uses our debit network, and so that helps a lot. In addition, even when people go to a store, they're using contactless or tap to pay, which has become extremely, popular. That tends to be debit. On the flip side, though, there's a cyclical component in that people tend to use credit for travel and entertainment, and those are still depressed. As they recover, there'll be a recovery in credit, stronger than it has been so far. And also, in tough times, people do tend to spend more money that they have in the bank than borrow money. So some of that will revert, but there's no question whatsoever that the debit outperformance is here to stay, and it reflects the acceleration of the move away from cash.
Vasant, just 30 seconds left. Can you give us any more hints about Visa's crypto services and how they'll work?
Well, we have put an ecosystem together to enable cryptocurrencies or central bank digital currencies We've worked with most of the major players. I think there are 35 of them we have partnerships with. Whether it's a store of value or a medium of exchange, as long as we can do it in compliance with all the laws and regulations, we will do what we can to enable both transactions that allow it to be held in your account, like an asset like gold, or used for a purchase, whether it's conversion to fiat or just as a cryptocurrency. And we're putting an infrastructure in place to enable all that. And in many ways, it's not that different than the infrastructure we put in place to enable trading in the 160 currencies that we currently support.
We'll have to have you back to tell us more. Vasant Prabhu, CFO of Visa, thanks so much. That does it for this edition of Bloomberg Technology. The big news today, of course, Jeff Bezos stepping down later this year to be succeeded by Andy Jassy. This is Bloomberg.